Welcome to the NYREJ Podcast. I'm your host, Rick Kaplan. I have a special guest today because we're going to talk about residential mortgages. And it's Fraidy Rapaport, and she is with Upscale Equities. And Fraidy, tell us a little bit about you and your journey to where you are today, as well as what Upscale Equities is all about.
Sure. So good morning, America. So excited to be on this podcast with you, Rick, and thank you for inviting me. A little bit about myself. My name is Fraidy Rapaport. As mentioned, as I was introduced, I'm the founder of Upscale Equities, Inc. This company was founded in 2004 as a residential mortgage company. We're licensed in New York, New Jersey, Florida, and Michigan. In 2004, we started off being licensed exclusively in the state of New York. And as the company grew, we increased the number of states of our licensing. A little bit about my background. So I started in the business, in the mortgage industry in 1998, working as a secretary/loan processor for a local community-based company, mortgage brokerage. I worked there for about 4 or 5 years, made my way up to being a loan officer pretty quickly. It wasn't that as complicated as it is today, or as complex as it is today, to become a loan officer. At that point in time, all you had to do was say, okay, I'm ready to take on a sale and get paid on a commission basis. Start dealing with your clients and get the loan closed, and you got paid your check. So I had an amazing boss that trained me in the business. He was also very generous. And he said to me, Fraidy, your strength lies in sales. Don't get stuck on the processing of the loan. Get into the sales market. And he actually started handing off his own clients to me to get me started. And for that, I'm forever indebted and grateful to him for giving me the opportunity. A couple of years down the road, I was newly married. I had one little baby at home. I was expecting my second child, and I decided to take the plunge and get licensed on my own, since I was commission-based almost 100% at that point. And that's when I started Upscale Equities. So we've been in business since 2004, and we rode the waves of the meltdown in 2009. Came back alive, thriving, went through some bumps, took a roller coaster ride along the way, and came back for the refi boom, made it through that one, did very well. And now we're riding the waves of the higher interest rate market, and still as passionate to be in this business as I ever was, maybe even more.
Well, we'll get right into the mortgage side of things, but there's one question I have to ask you, because I read somewhere, and I think some of the information you sent me, you have 8 children?
Yes.
8?
By now I say I have more than 8, because 3 of my children are married, and I consider my daughter-in-law and 2 son-in-laws as my own. So if I ever wanted to have more than 8 kids, I accomplished that feat by marrying some off and bringing in the in-laws.
I mean, I don't see too many people with that many children anymore. I mean, I come from a family of 4, and everyone used to say, oh, to my mother, oh, that's kind of a big family. That's kind of a big. And years before that, like my grandparents' time, their families like 8, 10 kids,
Right.
But
Right.
I don't hear of anyone eating.
Well, let me share a little bit about my personal background. Okay. I grew up in the city of Borough Park, Brooklyn. That's as, Jewish Orthodox as you can possibly get in the United States of America, right? I come from a community where large families are the norm, the accepted norm. And going into a career is actually going a little bit off the beaten track, just a little bit, not much. Many of us women pursue professional careers, in our community and in our culture. So it's not that unusual. But I was raised by, a stay-at-home mom. My mother always did something at home to make a couple of dollars, little pocket money. She did wig styling right out of our kitchen in our small Borough Park apartment. But in terms of pursuing a professional career, I never saw myself doing this. I fell in love with the business when I started working for that mortgage company. I was almost right out of high school. I did 1 year of post-high school seminary, it's called, as far as my education. And then I went right into the workforce. I did a little stint of teaching in between, but I realized that a teacher's salary in private schools is not going to get me far financially. And I wanted something that was going to be a little more lucrative. So when I jumped into this job at a mortgage company and saw the opportunity that it offered me, I was excited about it, and I absolutely loved the business. I love working with people. I love the sense of accomplishment that you feel when you come to a closing. And the profit margin was very nice. It gave, again, a lot of my friends were doing computer programming. That wasn't something that was up my alley at all at that point in time. That was very popular. So when I had this opportunity coming to me, I stuck to it. And I was able to support my family as the main breadwinner for till today. In the beginning, the first 10 plus years that I was married, my husband was a rabbinical student, and he studied the Talmud and other Jewish works for many years, which is also popular in our culture and in our society. So the fact that I have 8 kids really comes along with the package of how I grew up, how I was raised, and my ultimate goals in life, which is actually to raise a family. Pursuing a career, having a livelihood is just a means of supporting my family, and we give both 100% of our efforts. In fact, I always make a joke and I say, I run 2 corporations. One is Upscale Equities and the other one is Rapaport and Co., my family. And both of them get a lion's share of my attention on a regular basis, steadily, all the time.
I'm surprised you're not wearing like a Superwoman costume. With the cape and all that, because you're raising 8 children, and then you're running a successful mortgage company. That's just mind-boggling, because in this day and age, you have trouble finding people that have one child that they're fighting whether, how do I take care of that one child and get a job?
Right.
That's amazing.
To be perfectly honest, it is amazing, but I think that people naturally beat themselves more than they give themselves credit for what they do. So instead of giving myself credit and telling myself, hey, I'm Superwoman, I'm usually spending my mental energy telling myself, I'm not doing enough. I'm not a good enough mother. I should be doing better at my business, and that kind of negative self-talk, which is really wrong. Every once in a while, I do try to reassure myself and say, no, you're doing great. And I do get to hear from other people. Being validated by others goes very far.
Well, I find it very inspirational. And I think other women that might be listening to this, they should find this inspirational, that it can be done. You can't let anything really get in your way. It's kind of what you're trying to tell me. You go forward no matter what, and you get you kind of get the job done above what the standard is, which is very impressive.
It doesn't come easily. It comes at the sacrifice of a lot of personal sacrifice. I have to be honest and say it's not simple. It's a little easier for me now that my kids are older. When I was raising them when they were young, and I do still have young kids at home. My youngest is turning 10 years old on July 15th. But when all my kids were babies and I had them close together, my oldest is turning 25 now, and my youngest is turning 10. That's 8 kids in between. It was a challenge. I was always tired. I took a lot of household help. And I worked very hard. I wake up early in the morning, I go to sleep late at night, and I'm very dedicated and focused. I don't vacation often. I take off Shabbos once a week, is quiet, and even then we're busy cooking, taking care of the house, the kids, we're there. It's not a day off, But yes, I do work very hard. I do. And I will I will give myself that credit and say that, on the air, so to speak. It's not easy,
Well,
but it's very satisfying.
I like the philosophy, because that would probably mean more to me if I was looking for a mortgage and I met someone like you. I would probably want to do business with you, because I know that you will get the job done the way it should be done, because you're that type of a person. You have that kind of instilled in you. And in this day and age, that's that's not common at all. So that's a plus on your.
Yeah, it's interesting that you pick up on that point because I find that's one of the unique factors that I possess in the business, is that I can relate to people on a very real life level. Being the breadwinner, being a mom, being financially responsible, there's a lot of common denominators that I share with humanity out there, with moms out there, with fathers and husbands, raising large families, having the pressures of needing to, meet your expenses, the pressure of making that mortgage payment every single month, the pressure of not having enough to put away savings for down payment, and all the angst and all the whole emotional package that comes along with the desire to buy a home, provide a stable roof over your head for your family, a place for them to live and grow. All that is just part of my being. It's within the fabric of who I am. And that's what makes me more sensitive, more understanding, able to relate, and people feel comfortable and understood, which is an invaluable factor in the transaction altogether.
Yeah, and you said about how you ride all the different waves of the industry. And one thing that would come to my mind is that with the type of personality and the type of person you are, you'll be more sensitive to someone that comes to apply for a mortgage and understand really what their need is in the times of, interest rates are spiking. You might be able to also not just give them the mortgage, you might be able to give them the right of advice, is my feeling.
100%. In fact, I've given myself many different names and descriptions over the years. One of them being when the coaching fad was developed, I said, okay, I'm definitely a mortgage coach. I don't really call myself a mortgage broker. I'm a mortgage coach. Sometimes I call myself a mortgage scientist, because it takes a bit of a scientific mortgage mind to be able to put together a transaction. A mortgage psychologist. You're dealing with families, real people, real lives. Again, that takes good listening, understanding. And yes, so what you're saying is 100% true.
Well, I could do a show on just you alone on how you function every day. That could be its own little show. But let's get into the mortgage industry right now. Now, you
Great
said
idea.
that the ups and downs. We all know about that. But how are you dealing with the cost of the properties that have spiked? I mean, a property that a family could buy a single family home for like $300,000 probably 10 years ago, maybe. Now they're like $1 million. Now you have interest rates that are, now obviously the cost of the housing and the cost and the rate of how people are getting paid in this day and age, it's not balancing out. So how is that affecting how you do things?
It's
It's
a
a
great
stumper,
question. So
huh?
It's a stumper because it's a huge obstacle and it's a real challenge. It's a real challenge. I look at first time home buyers and it's really heartbreaking for me sometimes when I have these conversations and I go through the numbers of what your monthly payment is going to look like. It's painful. It's painful. So the people so who are the buyers today? Who are the buyers today? I also have to take into consideration and mention that I'm in a heavy market. I'm in New York, I'm in New Jersey. The real estate market has exploded. A home selling for less than 700,000 is almost untouchable anymore. Almost doesn't exist anymore in the areas and the markets that I circulate, more or less. So what I do is I do encourage certain buyers, if possible, that make sense of where they're targeting their territory, is to go for multifamily. Try to target and see if you can buy a multifamily so that you have some rental income to offset the mortgage expense. And that makes a huge difference. So I do a lot of that. Another tactic is put down more money, meaning most of the buyers today, a lot of the buyers today, if they're buying a single family home, they need to put down that 20 or even 30%. So they're getting help from family, or they're buying a little later in life, or they're waiting, to have more money available to put down to mitigate the mortgage payment. There's actually a feature that Fannie Mae put out called a temporary buy down. It's called a temporary rate buy down, and this is something that I'll talk about specifically here now because it might help first-time home buyers or home buyers of primary residence be able to afford their mortgage payment. So how does the temporary buy down work? What is it? You're locked into your 30-year fixed rate. So let's just say your rate is going to be 7%. Okay, let's use an average 30-year fixed rate. Average rate of 7%. If you're a first-time home buyer, you have the possibility of doing what we call a temporary buy down. That means that the buy down is applied to your mortgage for the first 2 years of the loan. What is the buy down? The buy down is that your interest rate will be put into like a promotional rate, 2% less for the first 12 months, making your payment based off of a 5% interest rate, and then 1% less for the second 12 months. So for the first 24 months that you're in the house, your payment will be less by a couple of $100s a month. On average, the numbers that I've been seeing is your payment will be about approximately $700 less per month for the first 12 months. And then let's say $350 to $400 less the second 12 months. Year number 3, it'll go back to the original payment of the 30-year fixed rate you're actually locked into. Now, the bank isn't doing you any favors. They're not chipping anything off your monthly payment for free. Where are they getting the money from to cover the spread between your actual 7% rate and your 5% rate, right? That $700 difference. So we take the savings, the accumulated savings, let's say it adds up to $12,500 between the 2 years. That $12,500 gets added to the sales price as a seller's concession. So I don't know if you're familiar with the term of seller's concession, but the seller could give a credit to the buyer at closing towards closing costs. So this is built in as a seller's concession. So if the purchase price is $600,000 and you want to build in this temporary buy down, the contract of sale will reflect $612,500 as the sales price, with that $12,500 being applied to the temporary buy down. So in essence, what you're doing is you're actually financing those savings up front. Am I clear? You getting me so far?
Well, I understand. Yeah, I understand.
Okay. So you're financing the savings up front. The bank is actually taking that difference, that $12,500, and putting it into an escrow account. And that's where they're pulling the funds, the difference of the funds from every single month. So you're making your payment based on a 5% rate. that very same month, they'll be drawing $700 from that $12,500 reserve that was created at closing to close the gap of your payment.
That they got from
This
the
has been
seller.
right. This is beneficial because sometimes first-time home buyers are in a position where they know that their income is going to increase in 2 years from now, and they'll be better able to afford the payment. People are also hoping and pining their hopes that interest rates will come down. So my 7% will 2 or 3 years from now become a true 5% or wherever rates will go. And that their payment will stay, that lower payment for the life of the loan. And I think that this is an what's the term I'm looking for? Underused, like not underutilized, an underutilized benefit that should definitely be promoted more. And that's why I appreciate you inviting me to this podcast, so I can talk about things that people don't necessarily know about, and it can be aired and publicized on a, viral level.
Okay.
For people to know and ask, what about the temporary buy down? Am I eligible? Can we build that in? It would make things so much easier for me.
No, so we're talking about that. What about the down payment assistance that is out there?
So there is down payment assistance. Down payment assistance is very limited. It's limited to your state. It's limited to qualification. The process is a little more arduous because usually you have to go through like a double underwriting process. And let's say that I wouldn't even call it average, but the down payment assistance program that my company participates in is a $15,000 down payment assistance program. So $15,000 is a really nice amount of money for someone that's strapped for cash, but it's not a whole lot. That additional $15,000 will barely make a dent in your monthly payment. It'll probably make a difference of maybe, $100 a month or something like that. I didn't crunch the numbers, and I don't like throwing numbers out there without being accurate, but let's just say an average of $100 a month, which is nice, but I don't find it to be the make it or break it. Where it is a make it or break it is when you do have a first-time home buyer that falls within, let's say, the HUD median income categories. That means the income levels that are set by the state that make you eligible for different benefits. So let's just take, a general HUD median income level of $90,000 a year of income. Okay, so someone earning combined income, household income of $90,000 a year, and they have $20,000 put away towards buying a home. That additional $15,000 will bring them up to $35,000. That's where the significant difference will come in. But at the same time, they need to target an area where the home prices won't be too high, so that their total $35,000 will cover them for their down payment plus closing costs. Now, if you think about it, $35,000, that's 5% of, let's say, $700,000. It's only 10% of $350,000. The numbers vary, so that's a pretty widespread. And then you have to take into consideration, well, $90,000 of combined household income, how much mortgage will they actually qualify for with a $90,000 income in today's market? And when you run those numbers, it's pretty scary. They don't qualify for much, especially in areas where property taxes are high. So it could get really sticky and really challenging and tough.
Well, it's also, and I think it's changing a little right now, but in the past couple of years, the amount of equity you would get in a home that you purchase might be difficult to have any equity or even be in the negative, because a lot of people were paying over asking. So if you paid anywhere from 30 to 100,000 over the asking price, first of all, you have to be able to put down more than 20%, more than 30% probably. Because how would you finance something like that?
Right.
Is it even possible to finance something that someone pays over, a percentage of asking?
Right. That's where, the bidding wars come in and the all cash buyers or those that are putting down 30 and 40%. My clients that are offering, 3% down are always at the bottom of the totem pole when offers are being presented. And again, yes, it is painful and it takes a lot of encouragement and a lot of perseverance not to give up. And I try to provide that encouragement to my clients. And I always joke, I say, we've had miracles in our company. I've had many stories over the years where I sat with clients and the situation seemed hopeless. Am I ever going to be able to find a home in today's market? Is it going to happen? And sometimes it'll, like 6 months down the road, they'll come back and they'll say, we just went to look at this house. Can we make it work? And we sit down and we just hack away, and we make it work. And then they close and they're like, you created, besides for a client for life, it's a friend for life. And that's really what keeps me going, is that level of satisfaction and fulfillment and happiness that I feel when we accomplish one of these feats of, see, you didn't think you'd be able to do it. And look at this, here you are, you closed, it's yours. It's unbelievable. It's exhilarating.
Yeah, I'm sure it is. But you're starting to see a lot of that starting to go away, though. Are you seeing that? Where people aren't buying houses as much with an over asking.
You're asking me if I'm seeing the people paying over asking price going away?
Yeah.
I don't think so.
No, it's still going strong, because you see, you hear, I mean, I've been hearing that the residential market is starting to slow somewhat and that the inventory is starting to grow. And once you start getting into that, over asking is tougher to get.
I don't see that happening yet at all. I'm constantly issuing pre-approval letters for over asking price. I have realtors sending me like the MLS listing with the list price. Can we update our client's pre-approval to this and this number? And my first question is, do you want the number on the list price? It used to be that in the olden days, sale prices were negotiated, right? The list price was $650, or let's say the list price was $450. Let's be more realistic of the time that we're talking about. And then people would say, oh, well, I'm offering $425 and I'll put in an offer of $415. And there was like negotiation going on. That's out the window. That doesn't exist today. It's just the opposite. Oh, list price says $625. All right, I guess my offer has to start at $635 or I'm out the window before I even get a chance to start.
But that is sort of just for the New England area or the Northeast. Because right now I've been hearing in Florida, and you said you're doing a business in Florida. There's markets in Florida where the property values are starting to drop. They have a lot of issues in that market, as far as cost of insurance, cost of
right.
Taxes, all the things have just gone sky high.
Right. So it could be in areas that I'm not as familiar with that this may be happening, but in my immediate market, it's not happening yet. I don't see it happening yet.
One of the other things I heard in that market, and it might be in other markets as well, is HOA fees are going through the roof. So when you might be able to buy a condo for a reasonable price, but now you're paying a HOA fee that's almost the same as the mortgage cost.
100%.
Does a mortgage company look at that?
Absolutely. In fact, this is a very necessary part of the mortgage qualification because it's part of the housing expense. You have to, what goes into calculating a person's housing expense? It's the principal and the interest of the mortgage. It's the property taxes. Then if they're doing less than 20% down, there's mortgage insurance. Did I say homeowners insurance already? I think I just said insurance. So let's say homeowners insurance, right? Then on top of that, if it's a condo, or sometimes not even a condo, sometimes it's just part of a development, a single family home in a development, you got that HOA being slapped on. Just yesterday, I issued a pre-approval with an HOA fee of $695 a month. The taxes on the condo were $931 a month. The HOA was $695 a month. I always said I'm in the wrong business. I should open up an HOA management company.
I
But
don't know if
yes,
you want to do that.
HOA fees are high. And when my first time home buyers are calling me and say, oh, I was looking at Zillow and I saw this condo and it's only going for like 275. I think I can afford this. I'm like, did you check the HOA? Do you know what the management? Get back to the agent and ask them what's the HOA fee, and they're skyrocketing. Instead of like 250 a month, they're becoming 375, 450.
Yeah, no, I have a friend that has a condo in Del Rey, right on the water, and their condo fees with the, with they assess the buildings now
Mm-hmm.
because of after the collapse of that condo
Yes,
of Miami,
yes.
in Miami.
Mm-hmm.
That and it's around $2,000 a month. And the people
How is
in,
anyone ever supposed to retire
well,
paying
that's the problem.
$2,000 a month to HOA?
That's the problem. And the people that are living in there that have been living there for years are now trying to sell them, but they can't sell them for anything because the condo fees are so
Because the buyers don't want to go into a $2,000 monthly HOA.
right. So it's
You
an
know,
interesting market.
I want to share something really juicy with you, talking about retiring and $2,000 monthly HOAs. So just looking a little bit ahead into the future, I'm not as young as I used to be. I'm heading into my mid 40s. Well, yeah, around. I mean, sorry for publicizing this, but okay. My parents are in their mid 70s, and they're from the baby boomer generation, right? How many, thousands and thousands and thousands of people, thank God they should all live and be well and live long and healthy lives. But how many people are heading into their 70s now, going deep into retirement and sitting on properties that still have mortgages, have high HOA fees, income has declined. Income is much, much, much less. Obviously, you're living off retirement. So they're getting themselves into very scary and unsecure housing situations. So how do we combat that? How do we give them back that feeling of security? Or how do we mitigate the feeling of, I need to sell my condo, I can't afford this HOA fee? So I'm going to introduce something that's a little risky for me to say in public, but I'm going to say it anyway because it's something that I'm bringing to the forefront. And again, this is an opportunity for me to bring it out into the open and talk about it without any fear, speak about it openly, and provide education and connection of where you can get more information about this. And I'm actually referring to reverse mortgages. So I'm not sure if you're familiar with reverse mortgages, Rick, but I have been doing
There's
a lot of training.
a lot of mixed information with reverse.
Yes, exactly. Reverse mortgages have been around for a couple of decades. I don't remember when HUD first, put out the product of the reverse mortgage, but it has been a very little tapped into product because of the controversy around it. And what I've been doing since interest rates have gone up and since I am getting older and I've been doing the conventional line of business and mortgages for so many years, I eat, breathe, drink, sleep conventional mortgages, putting myself into the reverse mortgage market to a certain extent so that I can prepare for the very near future of being able to help seniors secure their own housing and their own roof over their heads by educating the public as much as possible about reverse mortgages, what it is, what it isn't, and offering an in-depth consultation to understand your specific financial and housing situation to know if this product is right for you. So there is a lot of controversy. I understand why, but there's also a lot of ignorance and lack of true facts. And this is how I would like to extend my offer, my service, my knowledge, my stellar reputation of trust that I've developed within the community and beyond for people to know. When I talk to Fraidy Rapaport, I know I'll get the real facts. When I explain my financial situation and what's happening now and what I see in the future, what I'd like to do with my inheritance, with my estate, what I want to leave for my kids, what I own, my portfolio, everything included. We take everything into consideration and come to that conclusion to say, is a reverse mortgage right for me? Will it give me the security that I need?
Well, that's interesting. So yeah, I mean, something has to be offered because especially for seniors, because they're put in a pretty bad spot. And one of the other options is that seniors can't retire at 65 anymore. You have to go to your 75 as long as you're healthy, 75, 80.
Right.
I mean, I know senior, well, I shouldn't talk that because I'm a senior, but I mean, I know seniors that are in their 80s that are still going to work every day,
So sorry if I stumped you on this one. We could talk more about it if you want. If you have any questions you want to talk about, you want to expand more on this topic specifically, I'm happy to do it.
Well, we're running out of time. Oh, why? Because
Okay.
I said I'm a senior? Is that why?
Oh, no, not for you personally, just to, inform the public and let people know it's out there. And
But, I'm glad
kids know.
Yeah, but I'm glad you offered your service because it's something that seniors, there's so many different things that seniors have to deal with when they get to that point in their life. And it's all very confusing.
Yes.
And it's
Yes.
scary as well. So, I know
Right.
my parents are in their 90s. And, back when they were thinking about retirement, they never thought of it. Well, I have to sustain myself till I'm 90 years old. Their parents died between their late 40s and early 80s, and
Right.
the 80s was someone lived a long time. Now they're living into their 90s and 100, but
100%.
so I mean,
Yeah.
they didn't think about that, and they fortunately that my parents, if children are there, they can financially support them, but that's not always the case, and what
100%.
happens,
100%.
so
Yes, and with longevity, everybody hopes that they'll live long and healthy, but with the longevity comes the health issues and, the long-term care, the home aid that parents need, that, children can't always, their children are younger, they're working, they're supporting their families. They can't always be there to be hands-on taking care of the parents' daily needs. How are you going to cover those expenses?
correct. It's not
Not a simple matter.
no, it's not simple at all, and it's very
And because I don't
frustrating.
shy away, yeah, and because I don't shy away from challenges, and because I feel that I have a lot to offer from this perspective and from this industry, I feel like I'm literally doing a service for the community and for my clientele. And again, for anyone within any of these states that we're licensed in is who I can help and reach out and help right now with giving them this education and this connection and knowing that I'm here for you.
Well, Fraidy, unfortunately, we're coming to the end of the show. We've been on for almost about 45 minutes. So we
Time
went
flies
over a
when you're
lot of
having fun.
information. And like I said, I could just have a show just talking about you and yourself because you're very interesting. Your whole story is interesting. But if someone
Thank you.
wanted to get in touch with you, do you have an email? Not a website.
Yes.
And what's
My
that?
website is www.upscaleinc.com. It's my full company spelled out, UPSCALE, Equities, Inc., INC.com. I can also give you my phone number.
If you want.
You can pick up the phone and give me a call. Absolutely. I'll give my number right now.
Okay.
845-371 2622. That's my office line, 845-371-2622. It's a local area code, but today who pays for domestic long distance, right?
Right.
So yeah, you can go onto my website and there is a place like a little text chat button. Or if you're not web savvy, tech savvy, and you still want to talk to me, you can pick up the phone and give me a call. If you're calling the 845-371-2622 number, I may not always answer the office number, but you could leave a message, and I do get the messages in my email, so I listen to all of them and I return every single call.
Also, at the end of the video, not on the actual podcast stations, but on the video stations like YouTube or the New York Real Estate Journal website, you can watch the video to the end, and it'll also have all your contact information. So I love the information you put out there, and I hope people will contact you to find out more on how they can proceed in buying their home or even saving their home in for their future senior years.
Absolutely. Rick, I appreciate that you gave me this opportunity. It's wonderful to get to know you. And if you do want to schedule me for another podcast, you know where to find me.
Okay.
Okay.
We've been talking with Fraidy Rapaport, and she's with Upscale Equities. And I want to thank everyone for joining us today. You're listening to the New England Real Estate Journal and the New York Real Estate Journal podcast. I'm your host, Rick Kaplan, and until next time.